I'm your host, John Byrne. With me today are two folks from the Jewelers Vigilance Committee who are kind enough to give us some time today to talk about their industry, AML, sanctions, CFT-related issues, and some of the challenges going forward. So the General Counsel, Sara Yood, the Assistant Counsel, Liz Fraccaro, and Liz, as many of you will remember, also part, and they've both actually been part of the Antiquities Coalition. And Liz was kind enough to do a couple of interviews with us previously in the past couple of years. So Liz, obviously now at JBC. And I want to, again, thank both of you for taking some time today. Really, really appreciate it.
Yeah, our pleasure. Thanks, John.
So let's start off with, for those that aren't aware, obviously, when I came to DC many moons ago, you couldn't realize the number of trade associations and organizations, not just based in DC, but in general. And in your industry, obviously, there's need for advocacy and training and compliance tips. Tell us a bit about the JVC. What's its mission? Generally define the membership, and then we'll definitely talk about some of the challenges and some of the issues that you've highlighted with your membership.
Absolutely. So the Jewelers Vigilance Committee was founded in 1917 by a group of jewelers who were interested in enforcing the National Gold and Silver Stamping Act that had been passed in 1906 and signed into law by President Teddy Roosevelt. And that law essentially said that if you're going to sell fine gold or silver, it has to be a certain carat level, and there were certain regulations about it. But nobody was really enforcing the law. And the law had a provision that said a group of jewelers can form an association to attempt to enforce the law. And so a group did that. JVC has evolved many, many times since then. But essentially, our role in the jewelry industry is to help jewelry businesses all along the jewelry supply chain with legal compliance and ethics. So we help everyone all the way from mining to the retail jeweler and in between. And we help them by providing legal guidance and education on all the various laws that apply to purchasing and selling jewelry and jewelry components. Now, there are many that you might think of. So there are things like advertising regulations and, of course, anti-money laundering regulations. There are some you wouldn't necessarily think of, like we work with the Nuclear Regulatory Commission because some gemstones are irradiated to enhance their color, and they need to be licensed upon import into the U.S. So it's a really, really wide range of topics, but always interesting.
Membership in general, what's the scope, the number of members, high level? I know it probably changes from month to month or year to year, but so give us a sense of what your membership is comprised of besides the obvious that you just mentioned, Sara.
Absolutely. There's over 500 members. And, when we say that, there are, some very, very large retail businesses that are one member. And there are also, folks doing bench jewelry repairs on 47th Street who have a solo business and they are also one member. So a really wide range of businesses. We have all types from those who, buy gold back from the public, retail jewelry stores, manufacturing jewelers, designers, appraisers, gemological laboratories, and of course, mining operations as well.
So our audience obviously mainly comprised of the AML community, both in the private and public sector. Way back when I was at the American Bankers Association, we ran they still do it, but we ran a money laundering enforcement conference with the Bar Association, and we did invite one of your predecessors, I'm fairly certain, early on when we first learned that precious metal dealers and jewelers were covered to some degree under the Bank Secrecy Act. Mm-hmm. Describe when that happened and just generally, and we'll dive into some of the specifics, generally what the requirements are. They're not exactly like banks, but obviously you have compliance obligations. So talk a bit about that, because it's been quite a while, and just in case folks weren't aware of that, there are obviously obligations, but what they are.
Absolutely. Maybe I'll start with the background and you can talk about the requirements.
Sure.
Great. So, precious metal dealers were listed in the long list of Bank Secrecy Act businesses that should have been regulated by the Treasury Department, and then the regulations never got written. And then, of course, after 9/11, when the Patriot Act was passed, Congress redirected the Treasury Department and said, hey, remember that long list? You have to really do it. So my the woman who hired me, Cecilia Gardner, who used to be
That was who did it. It was Cecilia.
yeah.
That's right.
So she used to be the CEO of this organization. She was incredibly involved with the Treasury Department when they were writing the regulations for precious metal dealers. One of the things that they actually, they fought really, really hard for is a retailer exemption. So many retailers are exempt for having to have a full anti-money laundering program, so long as they're only purchasing from U.S. businesses that already have a program. So it's sort of structured like an umbrella policy. So the history of this is essentially, those regulations weren't written and weren't even drafted, I think, until maybe 2004. They went into effect January 1, 2006. I can honestly say that, I've been doing, AML. I've been at JBC for 13 years. I've been doing AML related work for about 10. In that 10 years, there are still businesses in the jewelry space that are coming to us and saying, we don't have an AML program. Our bank says we have to have one. What is that? There's still a lot of education to be done in this space because some folks, I think, are doing parts of it habitually, or it's like, no, my dad did it this way. My dad did KYC forms, so I do KYC forms, but they don't know what that means, first of all, or what it's part of. So it's a lot of educational work on our end to make sure that folks are doing the right thing.
Yeah, and Liz, as you do this, talk about the oversight as well. Because obviously in the banking industry, you're well aware, examiners come in and first get audit, first, the lines of defense, and then you have examiners. What are the guardrails of the oversight of your industry now?
I mean, goodness, there's many different guardrails and oversight, but specifically with regard to AML,
Right.
we have both the BSA governing this, but we also have the IRS getting involved, right? Form E300s need to be filed for certain types of cash transactions. And I would say as a whole, the industry is very well aware of these parameters because especially in the retail environment, I think a prudent business owner, whether or not they're educated in AML, is going to be aware of, trade-based money laundering and criminal activities because they see it on the day-to-day, right? And particularly in jewelry and precious metals and gemstones, these are extremely high-value items that are being traded, bought, and sold. And so there's a lot more sensitivity here, even from a business owner's perspective. The idea of doing KYC is not a foreign concept, even if the business owner isn't aware that it's tied to AML and AML obligations. They are aware that it's a very prudent business practice, particularly as you get into these extremely high value transactions.
All right, so you have the IRS. One of the obligations that other both traditional and money service businesses have is the reporting of suspicious activity. Before we jumped on, I did not look, obviously, so I don't know the answer. But I'm curious, what's the SAR environment like in your industry?
Yeah.
Obviously, yeah. So go ahead. Sorry.
Well, so it's really interesting. It's like technically you're not obligated to file one, but you are encouraged to do so. And we've talked a number of folks through filing them. And most of the time when a business calls and says, I think I have a situation where I should file a SAR, but I'm not positive. If you're making the phone call to ask, you should probably file it.
Yeah.
But, we've talked through some, a couple of different scenarios with some of our members about when you should file one or even when you should just check the box on the 8300 form saying that it might be suspicious. Those are like, I think traditionally folks in the industry are wary of doing that because they don't want to stick their hand up. They don't want extra attention. It's, the jewelry business is, as Liz said, it's high dollar value items. And there's a lot of privacy built into the industry simply because of that. You don't want to become a target. And so I think people are really often cautious about raising their hand for situations like that. But, we strongly encourage filing. And, we've been told previously by folks in the Treasury Department that they think the jewelry industry is underreporting SARs just based on the statistics that they can see. So we've made it, one of our priorities in the last few years is to really encourage, businesses to file them when they think it's necessary.
You know what I always find interesting about the SAR filing process, and obviously I come from the more traditional banking industry, that in some cases, yeah, you're reporting activity to the federal government, so there'll be an investigation. You're not so much doing it to protect yourself. Sometimes you are, but in some cases, I would imagine these jewelers think that there's been a crime committed against them. So
Yep.
filing a suspicious activity report is in their interest. Isn't that part of your dialogue with them?
Absolutely. Yeah. There was a business a couple years ago where they had found out that somebody was purchasing a large volume of like raw gold from them, and that person wasn't able to pay their bills. And in a related bankruptcy proceeding, it came out that they were reselling that gold to a refiner, which is just a fact pattern that doesn't make any sense. Like, why would anybody buy raw gold and then resell it to a refiner? And then so they approached us and said, like, what should we do here? And I was like, you should file a SAR, find out what happens. Like, it's just the if there's no legitimate business reason for a transaction, that's a great reason to file a SAR. It turned out that it was just kind of like a financial shell game. This person couldn't pay their bills and was just trying to, move money around to different places and get credit where they could. But so not criminal, or maybe not criminal, but like fraudulent, certainly, but not necessarily related to money laundering or terrorist financing in the same way you would traditionally think of it. But that's a great example of the situation where it was just like, hey, like, it's not going to hurt you to file the SAR. And in fact, it might help you figure out what actually is going on here.
Yeah. And I would say one of the big, hurdles we face in educating folks about this, and we try to get in at the ground level when people inquire about setting up an AML program, we start immediately telling them what SARs are, what function they serve. But if you're working with someone who's had an AML program in place, let's say since 2006, but they're a little bit less aware of the developments in the law, and maybe SARs weren't so important back then, we really try to drive home that this is a fully anonymous reporting mechanism. Even if it goes nowhere, even if your suspicions are misplaced and are wrong, there's no punishment to you. There's literally nothing bad that can happen to you for filing a SAR, regardless of the result of that SAR.
Well, yeah, the three of us are lawyers. That civil safe harbor, which I won't take much credit in life for what I've done in the AML space, but having helped craft that back in the 90s, that was our key goal, right? To make sure that when a financial institution of whatever size was filing a suspicious activity report, they're reporting an activity that is unusual based on the due diligence they did with the particular company. That may or may not be a crime, as you just said, Liz, but it may be something that law enforcement can feed on and whatever they're working on. So it's clear. There have been cases in the past 30 years, but unless a bank or another institution has been less than thoughtful in their reporting, there's been no issue. So that really is a key to drive home with your members, as you guys are doing, because that's the case. Civil safe harbor, complete protection for filing, so there's no downside. We're not saying, defensive file all the time, but if it's a question, why sit on that? So having said that, you've already given me a couple of examples. Can you guys give me a few more sort of broad-based red flags in your industry? What are some common red flags that the jewelry industry looks at based on your training, says, all right, we're going to file a SAR on this particular activity?
Yeah, I mean, again, I think you want to look at the behavior of the customer, and red flags are really tailored to a business and their business model. A business that's operating in Vegas, where someone might be coming in off of winning a jackpot, is going to have different red flags in place than your hometown jeweler on Main Street. That jeweler is not going to expect somebody to come in with a bag of cash. So the red flags are always going to be tailored to the business and the way in which they operate and the environment that they're in. But it is oftentimes a lot of that kind of like customer due diligence. You want to know who your customer is, where they're coming from, what their background is. Is there a legitimate business purpose for why they might be behaving in a particular manner? We always want to look at, the nationality of a customer in terms of investigating your beneficial ownership. Because again, we're talking about high value materials. And so that can be a way for for example, sanctioned individuals to access the U.S. financial markets. So you do want to be kind of careful about those things. Other red flags that may or may not be tied to money laundering, depending on the situation, is also, of course, the source of the materials. And Sara can get deeper into this as well if you want us to get into more detail. But, we are talking about materials that are coming from outside of the U.S. So who is your supplier? Where are they getting their materials from? Are the materials themselves okay to be traded within the United States? And whether that means the material is coming from a sanctioned country, or if the material itself is something that we do not trade in. Ivory is a pertinent example that's on my mind today because we got a question about it from a customer. But, there are materials that within the U.S. Either are not allowed to be traded or have various parameters in place. And of course, as we are always talking about, particularly in this tariff environment, very little, if any, of the materials that are in your jewelry are coming from the United States. There is only one place in the U.S. to get diamonds, and it's a state park in Arkansas. It's not a diamond mine. We don't have them here. The gold rush ended. Most gold is not coming from the United States. So we do want to be paying attention to the trade networks and mechanisms if these materials are coming from and passing through.
Yeah, and I'd add to that by saying there's a couple of things that are specific to the jewelry industry, I think, that can indicate a potential red flag. So some of the examples that we tell people when we're trading them are the jewelry industry is very habitual. So there are lots of folks who have had the same suppliers for 30 years and they order the same number of things or the same items or whatever. And if somebody like that all of a sudden changes their ordering and triples their order out of nowhere, that's something where you might want to at least pick up the phone and ask what's going on, and repeated requests for things like melting down jewelry to raw material and things like that. Those are potential indicators. But again, sometimes there are legitimate business reasons for those requests, so it just requires further investigation.
Talk a bit about the sanctions space. Liz, I mentioned before we recorded, you have a blog post article on your website on secondary sanctions. With sanctions being such an important both national security tool and economic tool, regardless of administrations, the issue of secondary sanctions is a more challenging space. So talk a bit about what your industry needs to understand about both. I mean, everybody has to deal with sanctions. They got to make sure that they're not dealing with countries on lists or individuals or companies or what have you. But the secondary space is obviously quite a bit more challenging.
Yeah. I mean, so at the first level, of course, when you're doing your KYC and your due diligence, checking individuals or businesses or what have you against the OFAC list is a pretty accepted practice in this industry. But we also need to be paying attention to the materials themselves. And, this blog post was drafted a little while back, but I know that it came to mind, and the reason we decided to write this was because we were seeing some pieces being traded in Hong Kong that were Burmese in origin. And I believe the material was jade. Burma, Myanmar is a source of very beautiful jade, but it is sanctioned and you cannot possess it and buy it and bring it into the United States, even if you are purchasing it in a place where it's perfectly legal. In Hong Kong, if I lived in Hong Kong and I wish to purchase Burmese jade, I can absolutely do that. I cannot bring it into the United States. And so we want to make sure people are aware of this, that there is this kind of secondary step where you have to really do your due diligence and make sure that these materials are permissible.
Yeah. And the sanction isn't material specific. It's actually company specific. So because the military in Burma controls the entire market for gemstones in Burma, the sanctions are on those various entities that control mining and marketing of gemstones. There previously was a law, the Tom Lantos Jade Act, that was in place for many years that prevented trade in jadeite and ruby from Burma. that was rescinded. But then, after the military takeover of Burma, the U.S. started responding using sanctions as the tool instead of the product law as the tool.
Interesting. Given the changes in the AML infrastructure, some have been direct, some have been by executive order or Treasury policy analysis. A couple of things I'm curious about your thoughts. One is, as we all know, the Corporate Transparency Act, which was a bipartisan piece of legislation, frankly, that passed a few years ago, and the regulations were being implemented. The Treasury announced earlier this year that they're not going to enforce the provisions about domestic entities. Now, given the fact that we talked about this before we jumped on, given the fact that the U.S. is being evaluated through the mutual evaluation process of FATF this year for a report next year, one of the key areas is what sort of beneficial ownership infrastructure do you have? What are, as AML experts, what are your thoughts generally, other than I think it's going to be problematic because clearly that was one of the reasons why we were not downgraded, but criticized in previous evaluations because we didn't have the CTA. Now we have it, but it only applies to foreign entities. Your thoughts on that? And then what's the practical impact, if any, to your industry of not having access to that information because it's no longer going to be reportable?
I would say we're very concerned, pretty disappointed in the way that the, enforcement has been effectively canceled. And this was a bipartisan law, as you said, that was signed by President Trump. And so we're concerned about the FATF review, certainly. The 2016 review, specifically highlighted this lack of beneficial ownership registration as a key deficiency. And so I struggle to think about how the Treasury Department is going to handle a review, a mutual evaluation by FATF. And for us, I think the great concern is, I think if there's a realistic risk of ending up on the gray list. And the jewelry business is an international business.
Right.
Like, even just the American business, right? As we've said earlier, like all of the products basically come from outside of the United States. So losing access to those foreign markets could be deeply damaging to the U.S. jewelry trade. So I would say we're worried.
Yeah.
I know this is an AML conversation, but on tariffs, I assume, since what you've all just said in terms of everything coming outside the U.S., I assume there's going to be some financial challenges to the industry in the U.S. I'm sure that's an understatement, but something that I would imagine your members are grappling with right now.
I have spent so much time in the last couple weeks talking about carnets and temporary import under bond and all of duty drawbacks and things I absolutely did not go to law school for. But yeah, it's a huge challenge in the industry. Even just a 10% tariff, which is what we got for most countries right now, is, 10% seems small when you compare it to what the tariffs were, in that 1 day period. But 10% of, a $3 million diamond is a lot of money. And so, and you think about that at scale for the jewelry industry, where it's so high dollar value. It's a huge amount of money. It's a big concern for foreign businesses who are about to come to the United States to show in Las Vegas in June, where we have the largest trade show is about to happen. And so there's a lot of foreign businesses really struggling with how are we going to show, how do we price our products fairly, not knowing, what the tariff is going to be, 70 days from now. It's a really big challenge.
Sure. Couple more themes I want to ask you about before we let you go. Another area of focus now that didn't seem to be the focus before is the crypto space. Obviously, there was attempts in previous Congresses to try to figure out what should be the oversight, what should be the regulatory infrastructure. That seems to be, in my view, turned on its head now, and now it's sort of an embracing of the crypto space. Not making a comment pro or con to the use of cryptocurrency, because obviously some of our financial institutions are working together. But when your members ask you about that as the value of a value proposition, what are sort of your initial comments to them, and what do you tell them to be either to be wary of or to make sure maybe they're doing more due diligence than perhaps they've done in the past? Because that's got to be difficult to navigate, especially now, as I said, the premise being it is much more embraced in the past couple of months than it's been in the past few years.
Sure. So, there are some jewelry businesses who are accepting crypto as payment. They're basically usually in the tech hubs that you could think of. So there's some folks in, the Bay Area and in Austin, who are trying to do this, and quite frankly, there's a lot of people out there who hold crypto and want to spend it. And so why not give them an option to spend their money on jewelry? We've told businesses in the past that if you're going to accept it, that's fine, but we suggest converting it to cash before it ever hits your account. Just simply because I think that there's a lot of risk involved. And so, yes, have a crypto wallet, accept the currency, but don't hold on to it. It's too volatile and too risky.
I want to thank both of you and get you out of here on this, on sort of a broad-based question. As we've just talked about, there's been a lot of churn and chaos in the past few months, by any definition. This isn't a political comment, it's a factual comment, because we've seen a pausing by the Justice Department to enforce the Foreign Corrupt Practices Act. So there's issues now that we've read about and we've actually talked about in various other conversations about Russian oligarchs thinking, oh man, the door's back open, we can do some things we couldn't do before. So that's going on. We just mentioned, obviously, the crypto space, the CTA not being as full as it was before. AML specific, or AML sanctions, CTF specific, Sara and Liz, what are the things that concern you most, or the challenges, let's put it that way, that you want to continue to train and make your members aware of through 2025 and 2026? What are some of the things, if you're giving a presentation next week, the both of you are on a panel or whatever, and you've talked about all the things we've already mentioned, but here are some other things to consider going forward. What would that be from a high level?
Yeah. So I would say that one of the challenges we face is that oftentimes our members or, other people in the jewelry space are getting backed into AML compliance by their bank. And so their bank compliance department is saying, hey, you're a jewelry business. We found that out. You need to have an AML program. But the bank compliance folks do not understand the regulations for the precious metal space. And they are different. They are not as rigorous as the banking regulations. And there's a real lack of education there. So I would say that, one of the challenges we see is making sure that we can get to compliance folks at the bank, explain what the regulations are, and help them understand that the products and services that we offer at JBC do help these businesses get to a compliant point. That's something that, we continuously have to work on with when we're working directly with banking partners. And we do have those tools and products available. So we encourage the industry to, keep coming to JVC for those services.
That's great. jbclegal.org is the website. And again, that's why I wanted to have the both of you on, is to better expand the understanding, as you just laid it out, Sara, with the banking industry. We had you're going to be pressed, if you're a traditional financial institution, to make risk-based decisions, right? And so if there's less knowledge of again, your industry and what you, quote, are required to do, but also what you do, what are the best practices? And if you don't understand that, we've seen similar issues in the charity and humanitarian world, where some of those entities can't get accounts, or they get, dropped from accounts because there's fear of terrorist activity or what have you. But those industries, we found, do have some rigor around them, whether they be state issues or tax issues or what have you. So this is really, really important. So in addition to having folks look to the website, Do you have like a newsletter, or are there other places or source we can get different source material that you folks would recommend if people wanted to get better up to speed on what is going on in precious metals in the jewelry industry from standpoint of sanctions and AML?
Yeah, so definitely check out our website. We do have a newsletter that goes out, and I would suggest also keeping an eye on the LBMA, the London Bullion Market Association. They have a lot of compliance guidance and information in the precious metal space. And I mean, they're UK based, so it's a little different, but I think they've got a really good handle on what's going on in that space as well.
Yeah, and if I can briefly plug, we do compliance briefings on a quarterly basis. So we try to keep up to date and keep our members up to date on any changes in the landscape or trends that we're seeing. And of course, we will, as and when things get announced that we aren't anticipating, we do our best to react and get information out to our members and any other applicable parties as quickly as possible, but also in a digestible manner. You know, I know that reading trade laws and the harmonized tariff schedule is difficult. Certainly, Sara and I did not go to law school to study trade law, and so I empathize with anyone who's feeling lost and confused around reading that material, and so we try to digest it for folks who are in this industry but not lawyers. Yeah.
Great. Sara, Yood, Liz Fraccaro, thank you so much for the time today. And, you know, hopefully we've expanded the minds of some of our AML folks to better understand what you folks have been involved in. And obviously it's much more than AML, as you just pointed out. So thanks for the time today. Really appreciate it.
Thank you, John.
Thank you.